For the past 22 years, Select Property has been helping global investors buy off-plan property. And in that time, one pattern stays consistent. Some people focus only on headline numbers such as projected yields and completion dates, which are obviously important figures to research. But that's not what necessarily determines whether an off-plan investment will actually work out for you. What also matters is how the investment is put together behind the scenes and whether that structure is protecting you or not. So in this video, I'll show you the 4 checks we build into our own developments to protect investors. I'm Judy Halliwell, and I've got 20 years experience at Select Property, a leading UK properties developer that has built and sold over £3 billion worth of property. We've also paid out over £280 million in rental revenue to our investors. So when I talk about the risks to be aware of with an off-plan investment, I'm speaking from the perspective of a properties developer who puts procedures in place to protect our investors. But first of all, what is off-plan property? Off-plan property is real estate that investors purchase before the construction process is completed, or in some cases, before it has even begun. Buyers commit to the investment based on architectural floor plans, designs, and developer projections. In return, they often get to buy the property at a price lower than its market value, making it a great investment opportunity. The checks I'm going to walk you through aren't just theory. They're the actual framework we use to evaluate our own off-plan opportunities before we offer them to investors in the global market. So let's start with the very first thing to check: the payment schedule. With off-plan property, you often get the benefit of being able to secure the investment with a structured payment plan, where you will pay a certain level of deposit upfront, or perhaps in stage payments and the rest payable at completion. This is beneficial to a number of investors as it allows for more time to arrange financing, usually at the earliest around 6 months before completion, whilst also allowing for capital growth over the build. A payment plan usually involves a modest reservation and admin fee, for example around £5,000 or £10,000 depending on the scale of the project, followed by a clear payment plan in which your deposit increments are outlined from reservation to completion. The benefit of off-plan payment structures often means that the bulk of your funds aren't required until the building progresses or is at completion. Another benefit to mention here about off-plan property is that you'll be locking in your investment purchase price often 12 to 18 months ahead of completion. And when we're talking about UK property, that's typically a huge advantage. UK property generally follows a steady upward trend, with house prices increasing by over 120% in the last 20 years. This essentially means that by completion, the property value may have increased, offering you instant capital growth. The common route for a deposit for off-plan property is that your deposit is paid to your preferred solicitors. Your solicitors will then hold the funds until the exchange of contract, and only then should the deposit be released to the developer, as in most cases your deposit is used to fund the bills of the development. This is where the credibility of the developer is so very important. The track record and experience plays an important role in off-plan property. Now, I've spent over 20 years reviewing off-plan investment opportunities, and I've put together a simple investor readiness quiz that talks through your personal investment status. You can click the link below to take it. So, say you found an off-plan investment opportunity you like the look of, the reservation fee is reasonable, and you're happy with the payment plan structure. Now you need to think about who you're actually investing with. Sometimes investors judge a developer based on a flashy brochure or what they've heard in a sales pitch rather than something much more meaningful, which is their track record. Off-plan property investment isn't just about a piece of paper in a construction site. It's a multi-year operational undertaking that requires planning expertise, construction management, and financial backing. A developer's past performance in these areas is one of the strongest indicators of how they'll handle the construction project and ultimately your investment. My advice is to select a property developer that is truly established and has been operating for a number of years. You want to look out for a company that has a team of experienced staff and has true property experts handling the project. And also consider what type of project has the developer delivered before. Is it a new built housing estate, commercial properties, or luxury apartments? This can affect the overall value upon delivery of your property. I'd look for developers who have experience in the same type of project you're considering. For example, if you're considering investing in a premium city centre apartment, make sure the developer has a track record of delivering exactly that. Don't be afraid to ask for material images and prove a developer's past success. And the final check ties all of this together because it's about making sure you can actually complete when the building is finished. Investors can sometimes become so focused on securing the property and the potential returns that they don't always consider what needs to happen in 12 or 18 months when the building actually completes. In most cases, when the building completes, that's when the bulk of your payment is due, and you can fund this through a mortgage if the building is compliant. My advice is to engage a mortgage broker ahead of completion, ideally one who is experienced in off-plan developments as well. This will offer you extra insight into what to expect when the property completes and how to ensure you can uphold your end of the contract. Ask your broker and advisor what could change between now and completion that might affect your ability to borrow, and stress test your finances against those scenarios. Now, it's one thing to know about what to check in an off-plan investment, but it can feel quite high pressure to follow those checks by yourself. If you're considering property investment, you can use the link in the description to book a call with one of our consultants who can run you through the current opportunities and the checks that we've discussed in this video. The 4 checks we've covered today are just the foundation of a successful off-plan investment. The real returns come from choosing developments in the right locations at the right time in the market cycle. Watch this next video where I break down the exact areas in the UK that are set for success in 2026.